The stock market for beginners can be a confusing place. You look all around and realize that you know nothing of the market. This, however, is one of the best places to make a lot of wealth, so people all around the world are increasingly getting interested in this place. There are many options that can help you with making money in this market. These include long-term investment as well as day trading. In day trading, you can make quick profits over a shorter period of time, while in long-term investments, the profits are more over a longer period of time. Research the share market. Just as you wouldn't start a business venture without finding out if it's economically viable for the long term, so you shouldn't start investing without first doing your background research. This research should include thoroughly researching the economic climate and the companies whose stock you're interested in buying. What's your trading plan? Next, you should figure out your trading plan. Will you be trading on a daily basis, or will you make long-term decisions? Day trading usually implies short-term goals, while long-term investments signify goals such as retirement. Read economic and financial analysis data. The stock market for beginners is a place full of financial and accounting information. To understand the numbers, you should subscribe to an online or print source for market data. Identify your investing objective. What are your realistic investment goals for your future? Create a game plan or action plan for your investing strategy and stick to it. Many beginners in the stock exchange market tend to think of making quick money and short-term investments. While this is a pleasant thought, in reality, there are many beginners that lose money and never get any profits. A long-term strategy is often a better choice for stock exchange beginners, but this is not always the case. What works for one investor may not work for another, and vice versa. Determine what kind of investment trader you will be. Do you want to be a day trader? Maybe you want to scalp shares, buy and hold stocks long term, or swing trade. Whatever you decide here will lead you down the path of learning how to trade shares using your chosen investment style. If you don't know about the stock market and are trying to learn about it, you are most likely to experience a severe case of information overload. Do a Google search for stock market education or learn the stock market, and you'll be literally inundated with information. The same holds true if you look in Amazon or walk into a brick-and-mortar bookstore. The choice of books for stock market beginners is simply astounding. In part, the reason why there's such an abundance of information on the stock market is because of the interest many people have in it. There's a market, and publishers try and cash on it. On the other hand, there is also a lot of information to offer on the stock market. No single book can give you all the information you need. As a beginner in the area of stock market investing, what must you do? The first thing you must realize is that a very well-written book about the stock market can be totally useless to you if it's inappropriate for your knowledge level. You need to accept you're a beginner and go for a beginner's book or a website that caters to beginners. After you've absorbed that information, you can go back and look for more information that is better suited to your new knowledge level. Nevertheless, you need to at least have some very basic knowledge. The stock market is nothing but a platform where shares of publicly traded companies are bought and sold. A share of stock is a claim of ownership in a given company. If you own a share of stock, you are entitled to a return on your investment if the company is profitable. Next, you will need to understand what fundamental analysis and technical analysis is. Fundamental analysis relies on economic supply and demand information, such as a stock's annual growth rate and quarterly earnings. This can be very time-consuming reading each company's financial reports. There is a paper called Investor's Business Daily to help with this. If you are going to be trading in the markets, you should not be without this paper. Technical analysis is the study of time, price, and sentiment. The tool used for this is charts. Charts know a stock's price history, and with practice, we can see everything we need to know about a stock just by looking at the chart. Supply and demands. If research reports show there will be a shortage of a stock, In the near future, you have another reason to buy if the other 4 tips indicate a bullish trend. If those reports indicate a larger supply will soon be coming to the market, you have another reason to sell short. Types of investment. There are 2 different ways to invest your capital in the stock market. The first one is the technical analysis, where the current stock pattern is analyzed for investing, and the second one is the value analysis, where the financial stability of the company is analyzed before investing in its stocks. Both of these methods can be followed depending on your return goals. If you are interested in short-term profits, you can choose to invest in stocks based on its current pattern. You have to follow these stocks closely to buy and sell the stocks at the right time. To get long-term profits, you can invest in companies which are financially stable. Though their stock prices don't have a sudden increase or decrease, you can surely expect some good returns in the long run. What kind of an investor are you? There are usually 3 types of investors, namely low risk taker, high risk taker, and medium risk takers. Depending on the type of investor you are, you should choose where to put your money. If you are the kind of person who does not like to take any risks in life, then probably the stock market is not the correct place for you. You should keep your investments low and take a step-by-step approach towards your investment. You should also be enrolled with a stockbroker who can guide you. Again, you should make a careful choice about your stockbroker. For medium risk takers, they can buy a combination of mutual funds and individual stocks and build their portfolio. There are several options for them, as they can be flexible and deal with little bit of losses. However, you should keep your investment mid-range and should not get overwhelmed when you are making good money. That is the biggest risk with this kind of investor. When the stocks are doing very well, they tend to go overboard with their investments, and this strategy of investing can actually backfire. A high risk taker is used to risks, and they tend to know the stock markets well. They seldom need advice. They know that taking big risks can reap large returns or large losses, and they are prepared for them. Control your emotions. Emotions are a real threat for your profits. It does not matter you have all the resources, tools, and experience at your disposal only to execute trades that have been taken on the swing of your emotions. Great are the chances you won't be profiting from those decisions. Whether or not you are under the influence of sneaky emotions should be one of the first questions you should be considering on the verge of a stock trade. Weigh the possible outcome risks, analyze the situation, observe the circumstances, and I assure you that you will be rewarded in the long run. Nearly 80% of those who attempt stock trading fail and quit because they can't handle the stress and pressure involved in trading financial stocks and make impetuous decisions which turn out into considerable losses. Don't be one of those. Take thoughtful decisions. Be confident. Confidence empowers you with the capacity of making effective decisions. Confidence builds up over experience and time and increases at each trade you make. It's a myth that stock trading is a get-rich-quick scheme. If you plunge headfirst into trading financial stocks without prior experience or knowledge, you will inevitably hurt yourself pretty bad. My point is, in order to achieve success, you must be confident. And being confident means that you are knowledgeable and you know what you're doing. You won't certainly win at each trades, but you will certainly learn at each trades. Don't let a little loss turn you upside down. If you know your decision has been taken on a rational basis, then you should not be worried about it. Once you decide to start investing, take it slowly at the beginning, only invest part of your capital, preferably no more than 20% in 1 or 2 stocks. This will allow you to get the feel of things without risking everything. You may also wish to diversify your holdings and have a mixture of stocks, bonds, and mutual funds. This will have the effect of reducing your risk and of course will also reduce your potential reward. The actual mechanics of investing in stocks or mutual funds is very easy to do. Online, there are many investment services that offer up-to-date information about stocks. And once you are ready to invest, it is very easy to find and no-frills online stockbroker who will work to very low commission rates. If you require more information and a high level of service, you can always use a full-service stockbroker, but of course, this will involve significantly higher charges. Before beginners start trading in the stock exchange, they should be knowledgeable in the basic functionality of trading stocks, bonds, securities, and other commodities. It's also advisable that they start out with caution and work their way in slowly. When beginners choose their first investment, they should ensure they pick something stable with little fluctuation. They should not invest large sums of money on their first venture into the buying and selling of stocks and shares. Most beginners will find experienced stockbrokers in the stock exchange who help them attain knowledge of the commodities in which they are interested in. An experienced stockbroker can guide them to a better understanding of buying and selling decisions. Another consideration to take when investing in the market is to choose the right company. In this sense, you should choose from the National Stock Exchange list so that you will find the right company to invest in. Choose one that shows good corporate governance and is consistently profitable. It is also necessary to check the performance of the company for the last quarter. In this way, you will know which company shows good sales and profitability. If you really want to make money in the stock market, then you should learn the value of investing. In this sense, you can obtain ideas from different resources such as books and even online. Investing in the stock market ensures superior returns in the long run. Remember that investing in the market requires discipline in order to obtain good returns. Likewise, with patience and diligence, you can surely pick the right stocks. Making the right choice is the key towards success when investing in the stock market. For beginners, it is important to learn market prediction before starting to invest. If you found this video helpful, then like, share, and subscribe our channel to get future videos.